The global economy is on shaky ground, and traditional investments are no longer a surefire way to secure your financial future. But fear not, because according to financial guru Robert Kiyosaki, there's one investment that will not only survive, but thrive in the turbulent times ahead. Welcome to MoneyWise Investor, your trusted source for financial insights. In this video, we will explore the most valuable investment options for 2024, according to Robert Kiyosaki. Robert Kiyosaki is no stranger to critiquing the traditional financial system. In fact, it's one of the core tenets of his teachings. He believes that the current system is built on a foundation of debt and fiat currencies, both of which are inherently flawed and unsustainable. Let's start with debt. Kiyosaki argues that our entire economy is based on the idea of borrowing money and going into debt. Whether it's individuals taking out mortgages and car loans, or governments issuing bonds to finance their spending, debt has become a way of life. And while debt can be a useful tool when used responsibly, Kiyosaki believes that we've taken it too far. We've become addicted to borrowing money, and it's putting us on a dangerous path. But what's so wrong with debt, you might ask? Well, for starters, it creates a cycle of dependence. When you're in debt, you're essentially working to pay off someone else's money. And the more debt you take on, the harder it becomes to break free from that cycle. It's like being trapped in a financial prison, with interest payments acting like the bars that keep you locked in. But that's not all. Kiyosaki also takes issue with the way our financial system is built around fiat currencies. For those not familiar with the term, fiat currencies are essentially pieces of paper or digital numbers that have value because a government declares them to have value. They are not backed by anything tangible, like gold or silver. And here's the problem. Because fiat currencies aren't tied to any real physical asset, their value can be manipulated by governments and central banks. They can print more money, devalue the currency, or implement policies that impact its worth. And when that happens, it's the average person who suffers. Their savings, their investments, and their purchasing power can all be eroded away by the stroke of a pen. Kiyosaki believes that this system is inherently flawed and dangerous. He argues that fiat currencies and debt-based economies are a recipe for disaster, and that we need to shift our focus towards assets that have real, tangible value, assets that can't be manipulated or devalued by governments or central banks. And that's where commodities come into play, the one investment that Kiyosaki believes will not only survive, but thrive in the turbulent times ahead. You're probably thinking, commodities? Isn't that just a fancy word for raw materials? Well, you're partly right, but there's so much more to it than that. Commodities are the building blocks of our modern world. They're scarce, they're finite, and as Kiyosaki often says, they're not dependent and can't be erased by governments or central banks. But Kiyosaki's critique of the financial system goes even deeper than just debt and fiat currencies. He also takes issue with the way the system is rigged in favor of the wealthy and powerful. He believes that the traditional financial system is designed to keep the masses in a state of financial slavery, while allowing the elite to accumulate even more wealth and power. So, what's the solution? According to Kiyosaki, it's to educate yourself about the flaws in the system, and to start investing in assets that can't be manipulated or devalued. It's to take control of your financial future by investing in commodities like gold, silver, and cryptocurrency, assets that have real, tangible value and aren't subject to the whims of governments or central banks. As we head deeper into 2024, the commodities market is shaping up to be a potentially lucrative investment opportunity. From precious metals like gold and silver to the burgeoning world of cryptocurrencies, there are plenty of reasons to be bullish on these tangible assets. Let's start with gold. The precious metal has long been regarded as a safe haven investment, and its value tends to rise during times of economic uncertainty and geopolitical turmoil. And with the global economy still recovering from the shocks of the COVID-19 pandemic and tensions bubbling between world powers, it's no surprise that gold has been on an upward trajectory in recent years. According to industry experts, the demand for gold is expected to remain strong throughout 2024. Central banks and institutional investors alike are increasingly turning to the precious metal as a hedge against inflation and currency devaluation. And with supply constraints and production challenges looming, the stage is set for a potential supply shortage, which could drive prices even higher. But gold isn't the only precious metal worth keeping an eye on. Silver, often referred to as the poor man's gold, is also gaining traction among savvy investors. While historically less valuable than its golden counterpart, silver's industrial applications in areas like solar energy and electronics have made it increasingly attractive as an investment option. And then there's the wild world of cryptocurrencies. Once dismissed as a passing fad, digital currencies like Bitcoin and Ethereum have proven their staying power and are rapidly being embraced by both individual investors and major corporations alike. The rise of cryptocurrencies can be attributed to a number of factors. First and foremost, their decentralized nature and limited supply make them attractive to those wary of government intervention and currency devaluation. Additionally, the underlying blockchain technology that powers these digital currencies has revolutionized the way we think about secure, transparent transactions. But perhaps most importantly, cryptocurrencies are being increasingly recognized by legitimate assets by mainstream financial institutions. Major banks and investment firms are now offering cryptocurrency trading and custody services, while companies like Tesla and Square have added Bitcoin to their corporate treasuries. It's worth noting, however, that the cryptocurrency market is still highly volatile and speculative. Prices can swing wildly based on news, regulatory changes, and investor sentiment. But for those willing to embrace the risk, the potential rewards could be substantial. Beyond precious metals and cryptocurrencies, the commodities market is also seeing increased interest in other tangible assets, like real estate, farmland, and even things like fine art and collectibles. As investors seek out alternative investments that can hold their value in the face of economic uncertainty, these hard assets are becoming increasingly attractive. Of course, no investment is without risk, and commodities are no exception. Prices can be subject to fluctuations based on supply and demand, geopolitical tensions, and a host of other factors. But for those willing to do their research and invest wisely, the commodities market in 2024 could be a lucrative opportunity to diversify one's portfolio and hedge against the potential pitfalls of traditional investments. Still not sure if they're good investment options for you? Let's look into other expert insights on commodities. While Robert Kiyosaki's views on the significance of investing in commodities like gold, silver, and cryptocurrency are compelling, it's always wise to seek out additional perspectives from experts in the field. After all, making informed investment decisions requires a well-rounded understanding of the market dynamics and potential risks involved. To lend further credence to Kiyosaki's stance, we've consulted with a panel of respected industry analysts and economists who have shared their insights on the current state and financial prospects of these tangible assets. Starting with precious metals, we turn to renowned commodity strategist and author Jeff Clark. With decades of experience in the mining and metals sector, Clark echoes Kiyosaki's sentiment on the importance of holding physical gold and silver as a hedge against economic uncertainty. Gold and silver have been trusted stores of value for thousands of years, Clark explains. In times of financial turmoil, when faith in fiat currencies and government policies wavers, investors tend to flock to these precious metals as safe havens. Their finite supply and intrinsic value make them a crucial diversification tool in any well-balanced portfolio. Clark also highlights the potential for silver to outperform gold in the coming years, citing its dual role as both a precious metal and an industrial commodity. Silver's widespread use in emerging technologies like solar panels, electric vehicles, and 5G infrastructure creates a constantly growing demand, he notes. As these industries continue to expand, the supply of silver may struggle to keep pace, driving prices higher. Moving on to the realm of cryptocurrency, we sought the expertise of Kathleen Brightman, co-founder of Tezos Blockchain and a leading voice in the world of decentralized finance, or DeFi. Brightman echoes Kiyosaki's enthusiasm for the disruptive potential of cryptocurrencies and their underlying blockchain technology. The rise of cryptocurrencies like Bitcoin and Ethereum represents a paradigm shift in how we think about money and value transfer, Brightman explains. By removing the need for centralized intermediaries and enabling peer-to-peer transactions, cryptocurrencies offer a level of transparency, security, and accessibility that traditional financial systems simply cannot match. Brightman also highlights the growing institutional adoption of cryptocurrencies as a key driver of their long-term success. We're seeing major corporations, hedge funds, and even governments embracing the use of cryptocurrencies as a store of value and as a means of facilitating cross-border transactions, she notes. This mainstream adoption is a clear indication that cryptocurrencies are here to stay and will likely play an increasingly significant role in the global financial landscape. As we look ahead to 2024 and the years beyond, it is clear that the commodities market, with its vast array of precious metals, cryptocurrencies, and other tangible assets, will play an increasingly pivotal role in shaping the financial landscape. Those who heed Kiyosaki's advice and embrace these alternative investments may find themselves well-positioned to navigate the uncertainties that lie ahead, secure in the knowledge that their wealth is anchored in assets of intrinsic value, assets that transcend the whims of governments and central banks, and stand as enduring bastions of financial stability in an ever-changing world. Thank you for watching. Make sure to like this video if you found it helpful, and subscribe to our channel, The MoneyWise Investor, to catch all of our upcoming investment content. Until next time, stay MoneyWise.